Hello and very good afternoon, everyone. I, Jyoti Maheshwari, welcome you all on behalf of AML UAE team. As the business regulatory framework and the risk typologies keep evolving, there is a need to define the methodology to be followed for safeguarding the business. Thus, the primary step in combating the financial crime is to define the AML policies and procedures proportionate to the nature, size, and the business risk exposure. However, it has been generally observed that the tailoring of AML framework is often neglected and merely perceived as the tick the box approach. In today's session, we will discuss the significance of the AML policies and procedures. We will also have a look at a common oversight by the regulated entities around this framework. We will also consider the best practices and critical compliance aspects that must be included in your AML program to make it comprehensive and help you guard against the financial crime risk. Having set the context, I would like to introduce our speaker for the day, Ms. Dipali Vora. She is a qualified company secretary with 8 years of experience in handling AML compliance and corporate governance. She is a seasoned professional with an edge in delivering personalized compliance training, empowering the learning experience of her audience. Before we get into the session, I would like to inform you that this webinar is being recorded and will be uploaded on our YouTube channel. Moreover, a participation certificate will be issued to all the attendees. With this, I request Dipali to take up the charge.
Thank you so much for the introduction, Jyoti. So now, not wasting any time, let's just discuss about what are the main requirements for drafting policies, what is the significance of that, what are the approach that we should have. So we will discuss this. Before that, let's first understand the basics. That is, what are the basic AML framework in UAE? So basically, there are three primary laws which are to be referred with respect to AML CFT compliances. First is Federal Decree Law number 20 of 2018 and Cabinet Decision number 10 of 2019 and Cabinet Resolution number 74 of 2020. Now, Federal Decree Law talks about that the DNFPBs, financial institutions, and VAS are required to comply with certain, KYC requirements, CDD requirements, have a compliance officer. Now, Cabinet Decision number 10 talks about that how are you going to implement the federal decree law? Like how will you comply with the regulation and the Federal Decree Law number 20 of 2018. Cabinet decision is often regarded as the implementation regulation also. Cabinet Resolution number 74 of 2020 talks about targeted financial sanctions and how do we implement them in our regulatory framework, our policies, procedures. So the screening requirement of, before we onboard any customer, we need to screen them, we need to understand from where are they belonging to. That all comes from Cabinet Resolution number 74 of 2020. The same is being referred in Federal Decree Law as well as Cabinet Decision number 10. Now, these are the primary laws, as I said. So all the DNFPBs, FIs, and VAS which are operating in UAE must comply with these three primary regulations. The one which are operating in ADGM or the one which are operating in DIFC, in addition to this primary legal framework, they are also required to comply with the specific rule book which is issued by their supervisory authority. So ADGM must comply with this three plus the rule book which is issued by their own supervisory authority, which is actually more stringent than the other primary regulation. Apart from that, there are certain other guidelines also which are issued by the regulatory authorities. Like there are, sector specific guidelines which are available on Central Bank of UAE website, MOE website, and there is also the regulations with respect to what a lawyer should do that is being available at the Ministry of Justice website. There is also specific regulations which are issued for the virtual asset service providers, which are now, there is an increase in number of these kind of companies in UAE. So there is this authority which is formed, that is VARA, Virtual Asset Regulatory Authority, which issues regulations for these companies. So this is the basic framework of law in UAE. Now before we jump on to, how to develop a robust AML CFT policy, let's first understand the basic requirements under AML CFT law. So all of the DNFPBs, FIs, WASP are first required to get themselves registered on GoML portal. Now, at the time of registering on GoML portal, one must also appoint a compliance officer. There are also in few other regulations that they are also being regarded as the MLRO. So, the name is used interchangeably. Once these two things are done, that is GoML registration and appointment of AML CFT compliance officer, the next step is AML business risk assessment. Now, business risk assessment is also known as firm-wide risk assessment, enterprise-wide risk assessment. So in this particular form, what we do is we understand our own company business, we understand the risk associated with that, evaluate the risk and on certain factors which are prescribed under the law. And to complete this, the ideology behind that is risk-based approach. So every company should have a risk-based approach. In layman language, risk-based approach means more the risk, more the controls. So wherever there are more risk, one must implement more controls to deal and mitigate that particular risk. Once we have understood and we have conducted the business risk assessment, we can then move on and draft our own company policies, procedures and documentations with respect to anti-money laundering law, where we can set controls for our company as we have already completed we have understood our organization at point 3. So we will then be in a position to draft our AML CFT policy. So we are going to discuss this particular topic at length in the upcoming slides. Now, this is the documentation part that we are talking about. The next part is implementation. How do we implement AML CFT policies? So we are required to conduct KYC before we onboard our customers. Of course, there are certain exceptions also mentioned under the law. But now coming to KYC, for all of the natural persons, one must ask for address and ID proof. For companies or businesses, one must seek articles of association, memorandum of association, trade license copy or certificate of incorporation, and the address proof. So after getting all of these documents, the next step of our client onboarding is screening. One must always screen the customers before onboarding against two mandatory lists, that is UNSC consolidated list and UAE local terrorist list. Now, once we screen our customer, there are three possibilities that could occur. That the name might match 100%, that's full match, or the name might partially be matching. And the third is there won't be any matches. So in case when you screen a person and there is full match, so in that case, one must file fund freeze report. Now this fund freeze report is actually available in your GoML account. So the GoML registration that we do, we will then have the ability to file the reports with the financial intelligence unit. The next is partial match. Now, when we screen a person and we come to a conclusion that it's not completely matching, but you have a suspicion that this could be the same person. So in that case, you will have to file PNMR, that is partial name match report. The third possibility is that when you screen a person, you might not find a match. So that is actually the best thing, that you did not find a match. No adverse media, no PEP, no sanctions, nothing. Now that would be the case when you are using a screening software. Screening can be done in two modes. One is through manual screening from EOCN website. You download the list and verify and check whether the name is matching or not. And the second way of doing is doing it through the software. Screening is to be done at 3 instances: before you onboard a customer, before you are again transacting with them, and third is whenever there is any changes in the sanction list. Now, after completing the process of screening, and since we have got the results, maybe match, no match, or there are some adverse media, or the person has come out to be as a PEP, the next step would be risk profiling. So risk profiling is a process where you assess the risk of your customers basis certain factors like what is their nationality, where are they coming from, what kind of services they want, how is their behavior, how did you onboard them, whether it was face to face, you met them face to face, or it was completely on the email and then you started, like the transaction was initiated. So at risk profiling stage, you will evaluate the risk which is associated to your customers and bifurcate your customers into 3 baskets: low risk, medium risk, or high risk. In case of low and medium risk, the documents that you've already taken would suffice, and you can continue business with them. But in case if the customer has turned out to be high risk client for you, then there are some additional measures that you need to take. So the word enhanced due diligence is, that clearly means enhanced means you're taking more efforts than the regular standard due diligence. So in enhanced due diligence, in addition to what documents you've already collected, you will be also seeking source of funds, source of wealth, as the case may be, and first payment. You must insist that the first payment is coming from their own account. In addition to that, you must also seek senior management's approval before you onboard a high risk customer. Now, once you have already onboarded, you have provided the services to them. So the responsibility, in case of high risk clients is that we should monitor the transactions. We should frequently monitor the kind of transactions that they are doing, whether there is any suspicious pattern that you're observing or not. So we need to make sure that we are regularly monitoring high risk customers. Now, in this entire process of KYC, you onboarded, you screened them, you assessed the risk, you actually provided the services. Now, in this entire process, if there was any situation where you had a suspicion, that a client is a suspicious in nature, or the amount which is involved in the transaction would be related to any criminal activity or is a proceeds of any criminal activity, then in that case, you can submit suspicious activity report or suspicious transaction report, as the case may be. So suspicious transaction are at three stages. The transaction would be a proposed one, or it is in progress, or the third is that the transaction is already completed. So when the transaction is at in progress or proposed stage, it is still an activity because there is no bank transfer, there is no money which is involved. So in that case, you will file SAR, and where the transaction is already completed, you will file suspicious transaction report. So these two reports are again available in your GoML account. So you can log into your GoML account and select which reports you want to file, submit the required information, and basically you will be alerting the financial intelligence unit with respect to your situation. Now, for all of the customers that you've onboarded and there are your active clients, you have to make sure that the KYC details are always updated. So for example, the trade license copy has expired. So you have to make sure that you are getting back to them and asking for the latest copy. If there are any changes with respect to management, so maybe you are required to do re-KYC. So this is the thing that one must keep in mind. So ongoing monitoring is also equally important for all of your active clients. The next requirement is record keeping. Record keeping means you have to maintain the data with respect to your customers, the transactions for a period of 5 years as per the primary rules and regulations. Now, if I look at the ADGM regulations, they say that you have to maintain the data for a period of 6 years. So this is the basic AML structure with respect to the compliances that a DNFPB should adhere to. Apart from that, there are some other requirements also, like getting your AML records audited by an independent auditor. Now, there are certain sector-specific reports also available, like as you saw, fund freeze report, partial name match report, STR, SAR. There is also a report called as DPMSR, that is Dealers in Precious Metals and Stones report, where if the transaction value in cash is greater than 55,000 AED, or if the transaction is in wire transfer, you have to submit that report through your GoML portal. Now, there is this also one more report which is specific to only real estate sector and lawyers. That is REAR report. It stands for Real Estate Activity Report. Now, this report is to be filed in case if the transaction is with respect to freehold property and the mode of payment is cash greater than 55,000 dirhams, or virtual assets or proceeds of virtual assets. So here, just to clarify, it is with respect to the transaction between the buyer and the seller and not the commission which the broker gets. So REAR is the report which can be filed. So now we understood FFR, PNMR, SAR, STR, TPMSR and RER report. In addition to that, we have to regularly update our policies, regularly conduct our enterprise-wide risk assessment, and There are two more reports which are available. First is HRC and HRCA report. HRC is high risk country transaction report and HRCA is high risk country activity report. So in case if there is any activity or transaction which is expected from high risk country like North Korea, Iran and Myanmar, then in that case, the DNFPBs are required to file HRC or HRCA as the case may be. In addition to that, you are also required to make sure that staff is being trained on a regular basis. So these are the basic requirements which are to be adhered to by the DNFPBs and financial institution. So now we have gathered today to understand that how can we develop our policies and procedures? What would be the basis of doing that? So let's now quickly move on to the next topic. So for developing the AML CFT policy, as I mentioned, the DNFPBs, FIs, and VAS must have a risk-based approach. Risk-based approach means, as I mentioned, in layman language, risk-based approach means higher the risk, more the controls. So when you are adopting or having risk-based approach, every company, every sector would be very different. The kind of the products and services in which the company is, into would be also completely different. The management, the risk appetite of the management would also be different. And in the kind of the environment that particular company is operating would also be different. So the kind of the checks the company is required to keep would also differ. To give you an example, the risk factors for a real estate sector would be completely different from the one which are by accountants and auditors or a CSP firm. Because real estate sector, the transaction would be high value. For auditors and accountants, the professional fees invoices wouldn't have that huge amount compared to the real estate transaction value. So the products and services would differ. Now, where are they operating? For example, there is a company, a CSP company, which is only catering to the local customers. So the risk involved would be different for a CSP who's also offering the consultancy services, incorporation services, or any other kind of services to the global clients also. So the risks are going to be unique because the clientele would be different, the business model would be different. Now coming to the management's risk appetite. Now every management's outlook towards a risk would be completely different. For example, there is a company who, the management is ready to accept the professional fees in cash or in virtual assets. Now, on the contrary, there is a company who has strictly said no to cash transaction or virtual asset transaction. So here the risk appetite of company to company would also differ. Now, if you adopt a policy or, just take a copy of the policy from a company which is operating in ADGM. So ADGM's regulatory authority is completely different for the ones who are, in mainland. So regulator environment is also unique with respect to each sector. So basically, the policies that we are going to draft, the underlying approach has to be risk-based approach. And that has to be completely customized because it's our company. Our company risk can never be same with the company with another company. For certain reasons that I mentioned that, business model would be unique, risk would differ, the products and services would be different. Now, let's now discuss with respect to if we are adopting templated policies or procedures. For example, we got a copy, we changed the name and adopted in our company. Now, there are two possibilities which could occur. Either we would over comply that or we are under complying that. Now, what would be the reason for over compliance and under compliance? Since we have adopted a policy of some other company, their risk, as I mentioned, would be completely different from ours. Maybe they have mentioned more controls and that is not applicable to us. So in that case, we'll be over complying than the requirement. Also, say for example, you have adopted a policy and you read it. When reading it, you feel that, okay, this is not applicable to me. This is not applicable to me. So you might not abide by the policies which are mentioned, which you have adopted for your own company. So when you don't act or when you don't follow your own company policies, there is a possibility that in future there would be audit observations. or when the authority is coming for any kind of inspection, even they wouldn't be happy with the kind of the approach we have. So I guess you all know that the policies and procedures that are being adopted in the company are to be approved by the management. So when a management approves a policy, that means they're agreeing to, adhere to that policy. Now, if it's a templated process, that means it's completely based on some other company's risk. Now, let's forget about the fines and penalties. The law is actually, enacted to just make sure that the companies are, they mitigate the risk of money laundering, financing of terrorism, and proliferation financing. But if it's just not about finances, the damage that it will cause to a company when they are more, they're more susceptible to the risk which is associated with MLFT, that is even more than the fines and penalties. So it is very important that we just don't copy paste a particular policy from some other company. They must have written a policy which would not be as per the law. So in that case, you will under comply. Or if you read a policy and if you decide that this is something which is not applicable to me, again, you will under comply. So in this way, it's going to add unnecessary workload if you are following the policy word by word. Maybe that is not applicable to you, but still you are following. Now, this would create a bad impression on your customers also, because you will keep on asking documents, which is actually not even required for you. So it's very important that we first understand our own business risk. We understand our own business, the risk associated with the products, the kind of the customers that we are dealing with, and then, draft our own policies and procedures. Now, in order to start drafting the AMLCFT policies, to begin with, we must first understand what sector we are belonging to. Whether we are a DNFPB by definition, FI, VASP, what exactly, to what sector we are belonging. What is the business structure that we have? Like whether it's an MNC, we have a holding company in some other country, or we are having everything whole and soul in UAE. What kind of services I'm providing, or what kind of products I'm into. We must also understand the kind of customers that they are dealing with. To what geographies our customers are belonging to. What nationalities basically. Are we dealing with a high risk customer, or are we dealing with a blacklisted country? Then we must first understand our own company operations. Whether we are catering to only local customers or we have global presence. What is the delivery channel? Delivery channel as in, are you onboarding a customer without face-to-face meeting or with a face-to-face meeting? Whether there are, intermediaries involved or not. In addition to that, we must also understand what is my existing AMLCFT framework. What is in my hands? What am I doing with whatever, clients, documents that I have? And we must also understand that what is the risk appetite limitation that the management has. That, they must have some internal vision mission statement that, okay, we are not going to go beyond this. So what is the management's commitment? So we need to understand this first. Then we move on to the next step, that is to understand in risk environment, like conducting enterprise-wide risk assessment. Now, when we conduct enterprise-wide risk assessment, there are two main elements, that is inherent risk and residual risk. Inherent risk means the risk associated with a particular scenario where no AML-CFT controls are in place. So that is inherent risk. When there is a situation, there is no such concept of, zero risk. There would be some risk associated with each of these scenarios. So we first understand the inherent risk associated with a particular scenario. Now, once we have done that, we need to understand that what would be our defense mechanism, or maybe, the measures that we would take to mitigate that risk. Once we have that measures in place, we will then understand what is the residual risk, means the leftover risk after we applied AML-CFT controls. So inherent risk and residual risk are the most important aspects when we conduct enterprise-wide risk assessment. So to give you an example, for example, like there is a PEP, and maybe my customer is a politically exposed person. Out of my 100 customers, 20 customers are politically exposed person. So what is the controls that I have? Now there is inherent risk with this situation is high, because the politically exposed person are to be considered as high risk. Once we have identified the mitigation measures, we can then understand that what is the residual risk. Now, for example, our defense mechanism towards the politically exposed person is that we are going to conduct enhanced due diligence. We will make sure that we have source of funds, source of wealth. We will seek senior management's approval. We will screen. We will monitor. In case if they are suspicious, we might also, raise a SAR or STR as the case may be. So that are the controls that you have kept. Since you have all of these control in place, you are you are going to be sure that no, my company will not be, taken benefit. My company is not vulnerable to MLFT risk because I have controls in place. So the residual risk would be low because of the controls you have. Now that controls which are there, as I said, that after you have controls, the leftover risk is low. Now the low risk which is left out, whether that is the risk appetite of the management, whether the company will be able to accept that risk when doing business, that is also something that we need to define. Now, whenever we are conducting enterprise-wide risk assessment, we must also consider the national risk assessment, which was done by UAE government. In addition to that, we should also understand what is the sectorial risk assessment. So in national risk assessment, which was done, in that document, it is clearly bifurcated that which sector come under which category. To give you just an example, real estate sector and dealers in precious metals and stone sector are considered as high risk sector. And CSP, auditors and accountants, they come under medium risk. So this is the sectorial risk assessment, which is issued by the government itself. So we need to make sure that when we are performing EWRA, we are referring these documents also. Then the next step would be understanding that we fall under which supervisory authority, what rules and regulations are applicable to us, and what are our compliance obligations that we need to do. In what cases we need to report. SAR, STR, HRC, HRCA, RER report, DPMSR report. So in what case we should report? And also clearly bifurcate our activities into covered activities and non-covered activities. So covered activities are the ones to which AML CFT law is applicable. Non-covered activities would be such that maybe it's not mentioned in the law. There we should make sure that we are having a risk-based approach. If that kind of service is, more risky, then accordingly we should take a call. Once we have understood this regulatory framework, we can then, conduct a gap analysis that where we are lacking, whether our EWRA is up to the mark, whether my KYC regulations, customer due diligence, customer risk assessment, transaction monitoring, whether I'm conducting audit on a regular basis or not. So whether I'm performing all these things or not. Maybe if you are already having some policies in place, you will be performing gap analysis. But if you are writing your policies for the first time, you will be having a very clear intent that, okay, I need to do this. I have to make sure that I have to mention KYC regulations. I need to be very clear with respect to my sanctions application. So just to give you an example, if I'm dealing with only local customers, maybe I am only required to look at UNSC consolidated list and UAE local terrorist list. But if I'm dealing with clients who are maybe from UK, US, you might have to comply with the other sanctions also. Maybe UK HMT, EU sanctions. So you will have to also look at that aspect of whenever you are drafting the policies. Now, since we have understood what is the, underlying principle whenever we start drafting our policies, now let's look at what are the crucial elements which should be the part of your policies and procedures which we have drafted for our company. So whenever we are drafting our AMLCFT policies, we need to make sure that we are clearly defining the external factors, internal factors that we are going to refer to. What are the general typologies of, money laundering, which belongs to my sector? If I'm drafting a policy for a real estate company, the typologies would be different than a company which is an auditor's or accountant firm or a CSP. So the typologies will differ. So we have to make sure that we are, that is a very, I would say, a systematic approach to be followed when we are mentioning about the risk identification. Whenever we have identified, once we have identified the risk, we also need to define that what are the Limitations of the management, like management is ready to take the risk till what extent. We must also understand that what is, when does a particular scenario occur, and if that particular scenario is occurring, what is the impact. So in that previous slide we discussed about maybe 20% of my client are PEP. How frequently that is occurring? 20% in a year. Is that going to impact my organization? Yes, the impact is going to be high. So that is the risk identification. So you need to mention some ground rules for that. Apart from that, you also need to mention about risk mitigation measures. Risk mitigation measures means what are the, what are the measures that you will take in order to make sure that your company is secure and is, is not affected by MLFT. But still, as I say, that there is no zero risk thing, but still we have to make sure that we are doing our best to safeguard our company and operations. So we need to make sure that we are developing mitigation measures accordingly after understanding the risk to which my company is exposed to. The next point that is very important is customer onboarding. So we must mention that what KYC documents would be taken in case if we are having eKYC method, then what would be the process? If we are if we are to screen our clients, then what is the software that we are using? Whether we are doing manually or we are, relying on a software. If we are relying on a software, what is the method to be followed? What is the customer risk assessment points that we are going to consider? Geography, maybe the nationality, the sanctions. So that is the things that we need to mention in our policy. We also need to define certain terms like UBO, because see, in our previous slide we just we just saw this particular point, that if we adopt a policy, say for example from a different country, there are such situations where the definition of UBO also differs from a country to country. They have different rules and regulations. In UAE, UBO are the ones who are holding more than 25% in shares, voting rights, control rights. And in other case, we consider the senior management as the UBO. So we need to define these terms also. How are we going to onboard them? What documents we will take? Who will be UBO? What will we do in case of a corporate company? How do we reach out to the UBO in case if it's a complex structure, if there are multiple companies involved, if I have already onboarded the customer, how I'm going to monitor my existing business relationships, how will I keep a control over that things. So that is something that we need to mention. Also, in addition to that, we should have a customer acceptance and exit policy, that in what case we will onboard a customer and what would be a big no-no. Maybe, like for example, some companies have clearly mentioned in the policies that they are not going to deal with any shell companies. So that's the customer exit policy. That means you're not going to work with them in case if it's a shell company. In addition to that, now comes the most important part, that is suspicious transaction. Every DNFPB, FIs, and VAS must have a list of red flags, which is, belonging to their own sector. Red flags are basically those trigger points which could possibly mean that, the transaction could be suspicious, or, the money involved in that particular transaction is coming from illegal means. We should mention with respect to how frequently are we going to update the red flag list. What would be our internal mechanism? Like how are we going to submit an SCR? What would be the procedure? What would be the roles of the first line of defense? What would staff do? How it will reach the compliance officer? So that is also something that we need to mention. How are we going to maintain the SCR STR log? We must also mention that, tipping off is something that nobody should do. Whenever we are filing an SCR and STR, we have to make sure that that is kept completely confidential. So there are panel provisions with respect to tipping off. So that is something that should be clearly, mentioned in our policy also. In case if SCR STR is already being filed, if there are any instructions which are received from FIU, then how are we going to deal with that? How will we follow them? So that is also something that we need to mention in our policies. The next is record keeping. So record keeping means that how are we going to maintain our data? Then who will have the right to dispose the data or archive the data? For how much period we are going to maintain that? From when that period of 5 years, when it will start from, who will have the rights to access that data. So this all is something to be mentioned when we talk about the record keeping in our AML CFT policies and procedures. Then we must clearly mention that what would be the duties, responsibilities of the compliance officer, what are the roles and responsibilities of the senior management, like making sure that the policies are updated, the policies are to be approved by senior management. They must make sure that they are approving or disapproving onboarding of high risk customers. So these are the responsibilities of senior management. Compliance officer would have a separate type of roles and responsibilities, like making sure that there is a proper AML CFT structure in the company, making sure that the staff and employees are being trained on a regular basis, or what would be the frequency of training that would be conducted in the organization. So the regular governance in a company should also be mentioned in the policy. We should also talk about the independent audit, that how frequently we will get the audit done for our AML records. And last is targeted financial sanctions. Now, targeted financial sanctions means how are you going to screen, in what case you will file fund freeze report, in what case you will file partial name match report, how will you approach, what screening software you are using. So that all is required to be mentioned under the clause TFS. So for example, you are using an XYZ software. When you screen a person, you might get false matches, you might get true matches. How are you going to deal with that? So what would be the conclusion? That is something that needs to be mentioned in targeted financial sanctions. You can also mention here that the company has already subscribed to the EOCN website. They are regularly submitting these surveys, emails which are being sent by the EOCN. So that is also something that should be mentioned in the policy with respect to targeted financial sanctions. Now we've understood that, okay, we must not adopt any else's policy and just implement in our organization, because we all will be having we all will adopt risk-based approach and understand our own organization. Now, what are the best practices that you can adopt to make sure that you have an effective AML-CFT program? We must have our enterprise-wide risk assessment done. We must consider our own business operations, our own customers, our services that we are going to make available. In case if we are coming up with a new service or we are launching a new product, so risk assessment of those new products and new services should also be done. In addition to that, we must make sure that we are staying abreast with respect to new AML CFT regulations, amendments, circulars which are coming up. We can regularly participate in the webinars which are conducted by EOCN or Ministry of Economy. So we must participate in those seminars and webinars where we can gain some more knowledge with respect to anti-money laundering law. Whenever drafting the AML-CFT policies, we have to make sure that we are involving our own company employees also. As I mentioned, the employees and the staff are the first line of defense. They will tell you that what are the practical difficulties that they are facing when it comes to customer due diligences. So we must understand and try to bridge the gap between these two things. What is as per the law? What are the problems being faced? And come to a conclusion. So that can be reflected in our AML-CFT policies. We have to make sure that our AML-CFT policies and procedure are, documented. It should not be something which is verbally just, spoken, that, okay, you have to take KYC form. This is our KYC form. You take this documents and it's done. No, you must have a policy in place that has to be documented and approved by the senior management. We must also mention with respect to the softwares that we are relying on. Like maybe we are having this eKYC facility. So we have to mention that in customer due diligence, how are we going to do that? That should clearly be visible in our policies also. If we are relying on a technological support, that is software. If you are doing manual screening, then you should mention the process that you follow with respect to manual screening. Now you have switched off, switched on to the screening softwares. So that should also clearly come out from your policies. And after that, once the policies are drafted, we have to make sure that this is being communicated to the staff members and the employees working in the organization, because as per the law. It's not just, the responsibility of the company to follow AML-CFT. It's a joint and a team effort where even employees and staff are equally responsible for making sure that they are complying with the AML-CFT regulation. So the staff should know that their company is AML compliant. They have their own AML-CFT policy. They should know where to reach out. They should have access to certain forms like KYC forms, assessment forms, or maybe internal SCR, STR's form. So that all should be communicated to the staff also. And last is we have to make sure that in case if we are getting new policies, we are writing our policy again, or maybe we are updating our policy, the past versions, the history should always be maintained in our company that, okay, maybe 2 years before, like 2 years ago, we were following this policy. Now we have updated, that all should be completely kept in the record. Ideally, the policy should be updated on a regular basis. Okay, maybe annually, you could mention that in your policies also. So now we had actually conducted a poll in the WhatsApp group where we had asked a question to the members that this is a situation actually which was created where we had inquired that a person had joined a new company as a compliance officer. When that person joined as a compliance officer, he started reviewing the company's policies and procedures. And he came to know that there are several gaps in the company itself when it comes to AML CFT compliances. So when he looked at it, he was confused that since there are so many gaps, which should be the first thing to start with? So let's first understand what are these four gaps. Now, the policies did not talk about ongoing monitoring of business relationship. The second gap was that the policies were not aligned with the regulatory obligations. The third gap was that customer risk assessment was inadequate. So when we bifurcate our customers into low risk, medium risk, and high risk, the process that we follow, that was faulty and inadequate. And gap item number 4 was there was a complete disconnect between the enterprise-wide risk assessment and the policies which were drafted. So now the question was that which is the first thing that should be corrected out of the 4 gaps that we just saw. So this was kept in, the poll was done. So people had reverted to us, and this was the answer of the poll, where people said that 71% of the votes were coming to latest regulations. Like the company should first update the policies with respect to the latest regulations, then conduct the enterprise-wide risk assessment, then update the customer risk assessment methodology, and then complete the ongoing monitoring procedures, define those particular procedures. So I think that this is one of the ideal way in which one can be compliant and, start the AML CFT compliance journey by first making sure that the policies is in line with the latest regulations, understanding their own organization, developing customer risk assessment, and then mentioning the procedures with respect to ongoing monitoring process. So thank you so much for joining us for this session. In case if you have any doubts, you can reach out to us at the email ID which is just flashing in your screen.